Hello, fellow investors. I know I'm in the middle of screening restaurant stocks right now, but I'd like to insert this video because it's NVDA and they reported earnings. I just learned a while ago. I didn't know. Anyway, we'll look into NVIDIA's earnings and later on I'll give you my entry prices for the stock. This is NVIDIA's press release regarding the quarterly earnings. The revenues grew from $5.661 billion to $8.288 billion, 46% growth year over year. I look for year over year data every time I look at earnings, guys, because every measure of valuation jots down to trailing 12 months, a yearly basis looking forward. Anyway, very impressive numbers, 46% growth year over year. Net income is down actually from 1.912 billion down to just 1.618 billion, down 15% year over year. I don't look much into gross margins, operating margins. I look at COGS or cost of revenues and OE though. I like to break down my numbers into three sections actually: COGS, OE, and net income. And then the free cash flow. You'll see them later. OE or operating expenses grew from 1.673 up to 3.563 billion, up 113% year over year. Well, of course, this is expenses, so the higher the expenses, the lower the net income and free cash flow. So basically, this is bad. Diluted EPS down also from 0.76 down to 0.64, down 16% year over year. Now, these expenses had to do with the ARM acquisition. This one here, acquisition terminal cost worth 1.353 billion. If we take that off the operating expenses, we'll be looking at 2.21 billion of operating expenses only, and probably their earnings wouldn't get hurt. Cost of revenues increased from 2.032 billion up to 2.857 billion. If we convert them into margins with respect to their revenues, 2.032 divided by 5.61. Actually, it's lowered compared last year, but not by much. It's still around those margins, 34, 35, 36%. OE increased, that's why the net income decreased, and obviously the free cash flow will decrease as well. We'll look into their current ratio. So if we divide 28.829 here divided by the 4.335, their current ratio last year, same quarter, was 6.65. Now, this quarter, only 5.32. It's down by a lot, but still way above 1, which is beyond good. Long-term debt increased by $1 million. Okay? Equity is down from 26.612 billion to now 26.32 billion. That's 292 million lost in equity. We need this later so we can compute for the PB ratio. This is book value basically. Next is free cash flow. We get the free cash flow by subtracting this number here. Net cash provided by operating activities. Less this number here. Purchases related to property and equipment, tangible, intangible assets. So 1.8 0.74 minus 0.298, 1.576 billion last year. Let's check that. Yeah, 1.576 last year's free cash flow. This quarter, 1.37 billion in free cash flow. So obviously, because of the termination cost, NVIDIA's free cash flow is down 206 million, down 13% year over year. Cash improved though from 1.99 billion last quarter, now up to 3.887 billion. They're stronger in cash now. To summarize this, actually, I have here this earnings snapshot. I just wanted to show you how I get things and numbers off of those reports, but obviously these numbers are the same and they're terrible for Nvidia, explaining maybe why the stock is down after hours. Revenues were magnificent, up 46% year over year, but again, no one buys based on revenues, no one buys for PS ratio. Don't get fooled. Net income and free cash flow down. This is value in billions, down 13 to 15%. And look at their margins for this quarter compared to last year's. Net income margin down from 34 now to 20%. Free cash flow margins from 28% to now 17%. Terrible, terrible quarter for Nvidia, all thanks to ARM acquisition. EPS is down 3%, trailing 12 months. Now, other investors would sell you Nvidia, saying that this and that this sector of their revenues are growing and so on and so forth. But again, guys, if you're buying the stock, you're buying into their strengths, but you're also buying into their weaknesses. That's why you want to own stocks you believe in, and you're okay to dollar cost average because no one knows the bottom. No one knows the future. These people on TV and pumpers on YouTube will tell you, hey guys, this is still good for Nvidia. Buy now. But actually, it's not good, at least for this quarter. This is why it's important to have a process. So you're not just buying into what they're saying. So your buying has basis and not just you bought because it's down 40, 60, 80% of the highs. That's not investing. Now, with everything said and done, I'll share with you my entry prices for the stock. Here's Nvidia's valuation summary. EPS multiple is still very high at 11.83. But I understand EPS is low. They're growing. They're not really aggressively buying back shares yet. This is basically the PE divided by the EPS. Mind you, this is updated already from their latest report. It's trading 1.93 times their margins. Let's look at their financials. This is what I mean by margins, net income, and free cash flow margins. I pay $1 or less for 1% of their margins, meaning I pay 1 PE or less for 1% of their margins. Price of free cash flow is low, 0.82, only because the price of free cash flow is 53.63. So in order for me to buy Nvidia based solely on this metric, this has to be below 20. Oh, so this is beyond my liking. Fourth metric is basically the free cash flow margins once the dividends are discounted. So you might want to consider buying Nvidia below 25.46 here. This is PE. Fifth metric is historical PE. It's trading at a higher PE now. I have a fair value of Nvidia of $85. Intrinsic value is $32. This is from Guru Focus. I have a high entry price of $90 from a 30% margin of safety of their margin. So, guys, this is still expensive, still treated like a growth stock with high growth multiples, high growth expectations, I still think Nvidia should trade at a premium as seen with their revenue growth. 46% growth year over year. That's not normal actually. It's just that this quarter, um, margins wise, net income, free cash flow wise, is really bad for them. Although buying Nvidia at fair values is not bad anyways. So yeah, I could be buying Nvidia at $90. Let's look more into Nvidia. PB ratio. Remember the equity. This is market cap divided by the equity. 16.15. I want this below 5. It's way above. Current ratio is very strong at 5.32. We've seen it a while ago. It's from 6 now down to 5.32, but still very strong numbers. Very strong cash position as well. They're basically debtless. So yeah, that's my take on Nvidia. Bad quarter, actually, but can we get Nvidia down to its fair value? I don't know. Here's more on their press release. They will be buying back shares up to $15 billion more in total. They'll also be giving out dividends, $0.04 per share. Also, when I'm looking at earnings report, I try to look out for their outlook. This sets some expectations for analysts to work on, but here, I don't see something to worry about, some drastic changes. So, still, I'm sticking with our entry prices, $90 for NVIDIA.